Welcome to Mad Money. Welcome to Cramerica! My friends, I'm just trying to make a little bit of money. My job is not just to entertain, but to educate, do some teaching here. So call me 1-800-743-CNBC or tweet me at Jim Cramer. When you have stocks with market capitalizations that are larger than some countries' GDPs, you can't ignore them. You have to handicap them. They're behemoths that deserve in-depth consideration before they report, if only to keep them on your radar screen. So on a very good day where the Dow gained 337 points, S&P jumped 1.23%, NASDAQ pole vaulted 1.86%. Let's talk about the potential impact of the upcoming quarters from Alphabet, Microsoft, Meta Wednesday, Amazon, and Apple Thursday. Multi-trillion dollars all. First, these stocks plus Tesla and NVIDIA account for almost 35% of the S&P 500. Now, that's what matters. Each of them is equal to dozens of other companies, and by virtue of their breadth of products, they represent the best we have in this country and in the world. They deserve their status. I can make a case to own every one of them, no matter what they say this week, because they are that special. Although you can't own all of them at the same time in a diversified portfolio. This group is like Murderer's Row, the stock version of the 27 Yankees. It's an extraordinary lineup. Second, we know that the market's direction for the next couple of months will be defined by the results we get this week. You cannot mount a sustained advance if you lose these companies. Nothing can make up for them. Yes, the stakes really are that high. So with those caveats out of the way, what am I expecting from the mega caps? Right, Alphabet, Microsoft, and Meta all report after the close on Wednesday. Can you imagine that? Let me stipulate that if you trade off the headlines on any one of these, you are a first-class moron, and I question your critical faculties. You have to at least wait to listen to the conference call before you do anything here. These are complicated companies. You will get them wrong. While Alphabet, Microsoft, and Meta are at their core tech companies, they've moved into multiple venues, multiple areas, multiple verticals. And that's why when I think of Alphabet, for instance, I now think of YouTube because it has that amazing business model where it makes a ton of money off ads, yet the ads somehow don't destroy the user experience, even for the NFL. I want to see expanded hours, expanded ads. Google search was supposed to be cannibalized by Gemini. Alphabet's AI platform, no. Turned out to be the two great tastes that taste great together. Shocked me. I talk about in my book, I talk about how I screwed this up. I didn't believe that could happen, but it is that strong. Sometimes it's good to have a little humility in how to make money in any market. The ad basis on Google, it's tremendous. I mean, it's just so good. The most important business, though, believe it or not, is not the ads. At least from the point of view of Wall Street, that's what we're talking about tonight, is Google Cloud, which has been on fire. Today, Google announced a deal with NextEra Energy to restart a nuclear plant in Iowa, because their data centers are desperate for electricity. Of course, reopening a decommissioned nuke plant doesn't solve the problem anytime soon. It won't be ready until 2029. When these plants are decommissioned, they're not meant to be recommissioned. They're scuttled, for heaven's sake. But Google has so much more business than they can handle, they got to do it. I call that a high-quality problem.
House of pleasure.
If they spend any time talking about their quantum computing business, that will be worth 10 easy points. Quantum. Second is Meta Platforms. Now, we need to hear all sorts of metrics like family daily active people and family average revenue per person. I know it sounds silly, but last quarter's DAP, yes, they call it DAP, was $3.48 billion. I think Meta's bumping up against that $8 billion person limit because that's all the people we have on the planet. Not even Zuckerberg can top that one. You can't create people. We're looking for $14 for average revenue per person. DAP and ARP. Yeah, they determine the direction. As long as expenses are under control, and they will be. What do I want to hear? I want to hear an upbeat, stern Zuckerberg who talks about his competitive advantage in AI and power. It would be tremendous if he talked about how small to medium-sized businesses have abandoned all other ways of advertising except his company. And maybe two others that he doesn't have to mention. It would be amazing if he talked about how the Meta glasses, the new black ones that we saw, the Renee Haas ad from ARM, are a great way to convey artificial intelligence, and they're actually a needle mover now. No longer a curiosity. All right, Microsoft's in a tough spot. It's basically become an enterprise monopolist. And even with this business-friendly White House, it's still not good to be talking about being a monopolist. What are we looking for? All right, we care about Azure, Microsoft's web services equivalent, doing at least 37.5% growth in constant currency year over year. If Azure grows at 40%, this $531 change stock will take out its all-time high of $555. What's on my personal wish list? I want fabulous CFO, Amy Hood, to do cartwheels and say they're crushing it. She'll never do that, though. Amazon's an amazing company. Retail is terrific. Prime's great. They're fixing Alexa. Love the video. But all that matters this week is Amazon Web Services growth rate. It was growing at 17.5% last quarter. I know, much slower than Azure, but it's also much bigger. People are buzzing about that number reaccelerating. I think we need to see at least 20%. 20% growth, and we need a real positive outlook from the company. No more meandering, no more musing, just positive. That could cause this, the poorest performing Mag 7 of late, to break out to the upside. Stern, positive. We're also beginning to hear about big corporate layoffs at the company. Good for earnings, but it doesn't matter at all. The quarter's all AWS all the time. My wish list. I want to hear that Amazon's working with NVIDIA to develop new chips that can help Amazon Web Services attract a host of new companies that would have otherwise gone elsewhere. I'm not talking about new young companies what need to write. We also need to hear that the big outage didn't hurt them. I'd like that. Finally, there's Apple. I care about the reception of the iPhone 17. If they say it's terrific in each major country, that's a home run. If they see an acceleration in China and the U.S., the stock takes out much more than its high. If they talk about an acceleration in service revenue, the stock rallies some more. Let's see. I'll tell you exactly what's going to happen here. The stock went out today at the high. It went out at $268. Went to hit $269. This stock goes to $280 if it says what I just said. It goes to $300 if they talk about accelerated growth rate around the world. Now, what I'm really hoping to hear, and this is the secret to 300, many of the hyperscalers want to pay Apple to become their default AI system, not unlike the deal Apple has with Google, where Google pays them more than $20 billion to be preferred search system. Except this time, I'm expecting the winning bidder to pay a lot more than $20 billion. It would be incredible to hear about an auction to become the AI provider. Apple doesn't have to pay any money, and they get it all. Gross margins would be extraordinary. We might even be willing to overlook sales in Shanghai. Now, I know it sounds like I am being facetious here. These companies are gigantic. They have many divisions. They're filled with brilliant people. I love them. But Wall Streeters are by nature Lilliputians with teeny tiny minds who are fickle and pick ridiculous metrics to determine the direction of these trillion-dollar monsters. They decide that Amazon Web Services has to accelerate, rather than whether Amazon's being a great company saving money with AI. They decide that Meta needs to have low power costs, or that Apple has to show us that the 17 Pro is doing better than we thought, or the CFO has to be boisterous at Microsoft. It's all revolting to me. But that's what people need to hear. That's what this week's about. The bottom line, is this ridiculous? Of course. But I don't make the rules. I just play by them. I'm going to John in Hawaii. John.
Hey, Jim, a big aloha from Honolulu, Hawaii.
As I always say to you, John, mahalo. What's shaking, partner?
Hey, tell you what, thanks for your education, Jim. I've beaten the S&P for the last 12 years running. And
that's what I want to hear. Yeah, I don't know, John. He said that stuff. That's fantastic.
Tell you what, I'm calling in on one that's had monster gains this year, and that's Arista Networks, ANET.
Don't touch Arista. Don't touch Arista. That one, that's a beast. That's a beast that's going higher. $200 billion. Jay Srialal. I don't talk enough about what an amazing CEO she is. That stock goes higher. Let's go to Chris in Illinois. Chris.
Booyah, Jim.
Booyah,
so I wanted to ask you about Kava Group. I love that they are profitable. I love the strong balance sheet. And then over the weekend, I get to Chapter 17 of your new book where you highlight the company's strong growth potential.
I sure do. I put Kava in the magic circle. I think you got to buy the stock at 62. It's down 44%. I picked it. It was going down when I picked it for the book. And I just said there's going to be someone that's going to come out of the scrum and be like maybe the next Chipotle from before the decline. I think it's going to be them. Oh, my God. I cannot believe it. The famous Bo Nix from South Dakota is called in North Dakota. Bo.
Uncle Jimmy Chill. How you doing today, sir?
I am doing well. How about you?
Not too bad.
Excellent.
Got a question from your nephew here. TKO, with the acquisition of UFC and WWE, are they a own it or trade it stock?
No, you can own that stock. That's a very, very good company. I would have I thought they'd give me a couple of 100,000 shares because I work with them. But I haven't seen it yet. I got to check maybe it's in the snail mail, But anyway, you got a good one there, Bo. All right, Bo knows. Bo knows. All right, look, Wall Street will hold the Magnificent Seven to a ridiculously high standard this weekend. You got to know the rules of the road before you make a decision. I just gave them all to you, believe it or not. That was true. I'm Manny tonight. crazy to believe, but there are now 10 U.S. companies with a market cap north of $1 trillion. So which company could be the next to join that hallowed list? I'm sizing up the situation. Then, amid a flurry of earnings, we get some positive reactions in the automaker sector. I got to detail how Ford and GM managed to pull it all off. And it seems like every day, right, we're hitting new high after new high after new high after new high. What do the charts tell us about the momentum of this market? I'm consulting the technical for the answer, so I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.